welcome to Sounding Board. I am Becky Gibbs. I am a partner with Boyum and Barenscheer, and I am joined with Claudia.
Good morning. I am an accountant in the factoring space, and my company name is Verity Accounting. And Becky and I have worked closely with audits and clients over the last couple of years, and we are here again on Sounding Board to talk to you about another exciting topic. Becky, what is our topic today?
Yeah, so today we are going to talk about financing within the factoring space and considering different options you may have. So, whether it's private financing or banking, Claudia is someone that is involved more on the other side. So, I'm on the service provider side where I don't get too involved with the financing piece, but you get more involved with your clients on helping them consider financing options. What are things that people should consider when they're looking at what their needs are and as they grow?
I think that everyone looks at a bank line as the least expensive option because they're only thinking about what the interest rate offered is versus a private credit line or facility. But I think there's a lot more to think about than outside of just the interest rate that you're being offered. With a bank, you're going to have a lot more resources of people allocated to the requirements there. There's going to be tighter reporting, covenant reporting requirements. There's probably going to be an unused line fee, and there could be in private credit as well. There's going to be an origination fee. There's going to be legal. There's going to be audit. So legal and origination you might also find in private credit, but typically, and especially if you're under a certain dollar value, you're not going to have to go through an audit. You're not going to have stringent covenant requirements. And these can all be very time consuming. There's also treasury aspect. And in a traditional bank line, that can be really lucrative for a bank. So you really need to take that pro forma from them and go through it line by line and say, because it can be like 2-3 pages of fine detail, negotiate the ACH and wire fees. What are each line item here? Because that adds up quickly. And that's a really big money making piece for our banks. So you really have to look at everything in its totality, not just what's my interest rate, because that can actually be very insignificant in the entire picture. So that's what I think.
Is there a portfolio size that you recommend doing more traditional bank financing versus starting out with private?
Well, there are different sizes, bank sizes where the bank is comfortable with, anything under 10 million and would even be fine offering a $1 million line of credit. So, but some banks don't want to touch anything under 15. So it really depends on who you find and who you're approaching. And of course, I can give anyone that's in need of some banks or private credit. I'd be happy to give them some information on, based on their size. But so yeah, and I think in too, Becky, like know that people tend to graduate from maybe the smaller banks and can go to a bigger bank, and same with private credit, maybe you're in private credit and then you can graduate to a bank and then you would come into play with um
Yeah, I mean, more often than not, the banking side, they're going to require some kind of assurance on the financial statements. You probably can negotiate that at the beginning, right? So if it is a smaller first year, maybe you can do some sort of compilation or even start with that review before you have to hit an audit. So depending on the size of the line of credit is what they will require. um, I definitely suggest if you are going from nothing to needing an audit to try to push back on the banks of, hey, can we start with a review? That just helps you. Well, one, it's the cost factor. And two, getting a review done before an audit just helps you kind of get everything aligned. You can figure out where you need to maybe tighten up procedures, understand your financial statements better without having to go through a lot longer of a process diving deeper into your controls and everything you have in place versus a review is more that inquiry and analytic, and it allows you to gain an understanding of what going through an review or audit is without having that really big hit that first year.
Yeah.
I have had private also require reviews or audits too. So it kind of depends though of the sophistication of who you're working with and how much they might loan out to various companies.
Sure. Yeah, you had mentioned in a different conversation, private equity most likely is going to require that. Um, yeah, and maybe depending on the size.
Yeah, is there other things that you would recommend in terms of when you're working with a bank of making sure you're considering before you move to that next level?
If you're working with a bank, what would you consider?
Yeah. Kind of the things people who don't deal with the finances regularly are going to get asked and not be surprised about, I suppose.
Yeah, I mean, I guess you would start. You don't want to be under constraint to have to ask for an increase or to be forced to move out because you're getting too big. So there's always planning that needs to be done. I would say good budgeting, good forecasting, good communication and conversation with the bank so you kind of know where they're at and the if you're going to get an increase or if they're expecting you to kind of move on, you're becoming too big for them. So I think that aspect, and because it takes a while to go through all of the different assessments of what the main, there's like I said earlier in the conversation, there's a lot of different fees that you need to consider, and they can vary tremendously. So let's say Treasury is less expensive here, but then you've got these astronomical legal and origination fees. So you really need to map it out and compare and contrast because maybe you'll take that higher Treasury because the higher legal gives you, it's just, it works out better that way. So yeah, that's
Is it quicker to close with the private than the banks? Like, what's the timeline difference between?
I feel like everything is quicker. If you're at the bank and you need a loan modification, that's probably going to be something you need to address well in advance. You've got more layers. And in private credit, it's going to be a much faster decision. So that is definitely something, a big consideration too. But I think that we've covered pretty much all of the key items that would be involved.
Yeah, those are some good tips and tricks and things to consider as especially as your factoring business is growing and maybe you're just starting out. You begin in one place, but the goal might be to get somewhere else. So being
Yeah.
ahead of where your growth factor is so that you can get the right players in place to help you with the financing.
Yes. Very good point. Thank you, everyone, for joining us today. And
Yeah. Thank you, Claudia, too, for your insights.
yeah, always great to have these conversations. And I hope they're helping people out there. So thank you.